Good morning, ladies and gentlemen, everyone on site, as well as all of you who are tuning in online. It is my pleasure to be here today to participate in this very important event. Now, earlier this morning, we have heard how scams is on the rise in Singapore. We can say that a big part of it is because we are very connected digitally. And this could make us more exposed to this risk of scam, not only domestically, but also in the region or even globally. Now, obviously, the solution to this is not to disconnect ourselves digitally. I don't know about you, but at least I enjoy the convenience of being able to order my groceries online, get it delivered, not stepping out of my house on the same day. I can tap out online and get it delivered to my house as well. And I can make transfers without queuing at the ATM first to withdraw cash. So, in fact, for businesses, a lot of them have to rely on digital platforms to connect with their customers, with or without COVID. It has almost become a hygiene factor in many sectors to be able to provide digital services. And all the more, for financial services, it has to be able to provide these digital services to support the needs of people and businesses. So the best defense against scams is actually for each of us to play our part. What role does financial institutions play? And what can each of us do? Now, before we go into that, let's just take a look at the two common scams that we see relating to financial services. The first, investment scams. This is not new. Victims are typically enticed to invest into seemingly lucrative schemes or products. And then the type and form of investment schemes probably have evolved over the years, but there are usually a few telltale signs that you would notice. First, it is that they will always promise high returns with little or no risk. Many of them will also claim to, for instance, guarantee or protect your capital with very high returns. Now, this is to hook people in who may just be interested to find out a bit more. I can tell you that no investment professional will make this kind of promises. We have to remember that investment always carry risk. And the higher the promised returns, the greater would be the risk as well. Many of such scams would also be coupled with pressure tactics. I think we heard from the panel earlier, they are essentially tapping on our FOMO mindsets. And they will say that, special rates for the first 50 investors, or if you do it now, click now, you'll get 10% more returns, etc. These are really tricks to make you click on the banner, commit your funds now rather than later. And often, scammers will also claim that they have established track record or they are regulated by authorities like MAS. And then these websites can be very professional looking. It's very hard to discern, right? And they may also claim that they have won multiple awards, and they use testimonials from random people, Joe and Doe, who say that, I've made so much returns over a short period of time. Now, the second type of scams that we see is actually relating to online banking and e-payments. Victims are often tricked into providing their banking credentials, information, other card information, or OTP. And the scammers would also then use the information to make fraudulent transactions and fund transfers. This is what we call phishing. And we see three forms of phishing. The first type, I think it has been talked about quite a bit earlier, is through social media channels and through impersonation calls. So the scammers will use different tactics to lead the target to believe they are who they are. Often, they could be saying that they call from the banks, and then there's this great deal, and they want you to click on some links, or they ask you to provide them with your online banking login information. Some scammers would also use phishing emails or SMS to lead victims to fake websites that look identical to the real ones. And the third type of phishing is where victims may be tricked into installing a remote control software. So that's strange, right? What does this do? So it essentially allows the scammers to remotely access your devices and control your devices. What do financial institutions do to protect the customers and to prevent scams? I think ABS has covered that a lot already, so I'll just briefly cover them. Firstly, financial institutions have adopted measures on three fronts. One, they safeguard the security of transactions by implementing controls such as two-factor authentication, transaction alerts, as well as things like confirmation of your payment details. Second, there are also proactive detection methods, such as fraud monitoring and surveillance. They may also, for instance, block payments to suspicious merchants who may be involved previously in scams, or they will place limits for amounts which will be transferred to such merchants. And third, financial institutions would also work with relevant website hosting providers to take down fraudulent websites where it's possible. Now, when unauthorized e-payment transactions occur, there are certain guidelines in the industry on how financial losses may be shared. For card transactions, the ABS actually has a code of practice relating to credit cards for banks that they would make reference to. For instance, there is a cap of $100 for consumers if the cards are lost or stolen, and then there are unauthorized transactions being charged. And during the period of investigation, interest charges and late fees will not be imposed. For online card transactions, there are also additional rules on the credit card scheme that says that if consumer is actually has unauthorized transactions and it is paid to merchants which do not adopt OTP authorization for their online customers, the consumer would not be liable. For non-card e-payments, consumers who have practiced cyber hygiene and have not been negligent will not be liable for losses arising from any unauthorized transaction that do not exceed $1,000. And of course, consumers will not be liable if any unauthorized transaction is being made due to the bank's or the payment institution's own lapses. Now, these are guidelines that are premised on consumers themselves being able to play their own parts in safeguarding their own accounts. I'm sure you would ask, what can I do to safeguard my own accounts? When it comes to e-payments, there are a few steps that we can take. First, securing our devices. I'm not talking about not losing our phones only. The important thing is also about updating our phones with the latest security patches and also updating our computers with the latest antivirus software. These are basic cyber hygiene practices that we must adopt, especially since we are so connected digitally. It is like ensuring that the locks to our house is not even broken in the first place. And then second is keeping your passwords safe. I think earlier the panel has said that the analogy is really not giving away your house key. It is really that. Some scammers may say that they need your online banking credentials because they want to check your account, because they are calling from the bank or even some authorities. Remember, your financial institutions or the government agencies will never call you, email you, SMS you to ask you for your online banking credentials. When in doubt, what you should do is to directly verify either with the banks, with the financial institution, or the authorities. And don't use the numbers which are provided to you by whoever has called you. Do it via the official channel. Thirdly, you should also consider setting and monitoring your transaction notification. Banks and payment institutions will provide notification for outgoing transactions based on either the default level or the level that you set. So make use of this function to protect yourself. How do you do that? For instance, you can lower the transaction value that you want notifications to be sent. And this will allow you to be notified promptly when there's any unauthorized transactions, even when it's small value. And then, of course, after you set it, please stay alert to it. Don't think that, this is another random marketing promotion I'm not going to check. Really pay attention to these notifications, because if you ignore them and it is really an unauthorized transaction, it will be harder for the financial institutions and the police to trace them if you report them late. Then, of course, if you notice any unauthorized transaction, report them to your bank or your payment institutions immediately. They will have a reporting channel for you to report such unauthorized transactions or loss of cards, and sometimes a police report will also be required. When it comes to investment scams, Some of you will remember a video back in 2018 starring the very talented Hossein Leong as Auntie So, telling you to ask, check, and confirm. And then more recently, we also see a video of a man buying a car without checking it, then after that, the door fell apart. This is actually similar to what could happen if someone invests without checking. Through MoneySense, which is the National Financial Education Program, we have been repeating these messages, and I urge everyone to share. So what exactly is ask, check, and confirm? First, ask as many questions as you need to fully understand the investment opportunity. For instance, how does the investment scheme generate such high return without risk? What is the maximum that I can lose? And what could happen if anything goes wrong? So be very wary of companies which may give you answers that don't directly answer your questions. And do some homework, benchmark against some other investment programs to see if it makes sense. And even if the company is able to provide you answers, don't be too quick to believe everything that they say. Be sure to check. Check on the company, check on their owners. For instance, check if the company that they have put on the website about itself is true. You can check the address, check their track record, go to some online forums to double check, and then see if there are any negative reports or complaints about them. And then after checking, if you don't find any information that suggests that the investment may be dubious, you should still confirm. In fact, I think Hossein Leong will tell you to double confirm. So, what do you confirm? Confirm before investing that the company and the representatives themselves are not providing unregulated financial services in Singapore. MAS website has a list of regulated institutions as well as financial representatives which are regulated by us. There is also an investor alert list that you can check, and these are actually a non-exhaustive list of entities who have misrepresented themselves to be regulated or authorized by MAS. If you see any names there, do not deal with them. Regulated financial institutions will have to meet disclosure requirements. They are also subject to MAS's supervision. So if you choose to deal with unregulated entities for any financial services, you will not be protected. Well, finally, we know that more can be done and will be done. Consumer education remains a key pillar as we see today. We need to raise awareness and, in fact, push everyone to then become vigilant, to take active steps to protect themselves even before the scam takes place. Today's event is clearly an important part of this effort. And MAS will continue to work through MoneySense to continue our campaigns on this front and work with other agencies and the industry to do so. And finally, MAS also wants to improve on the current framework that we have to better address fraudulent e-payment transactions. And on that, we have partnered with the industry to commence a review. And this review will provide greater clarity on responsibilities and liabilities of consumers and financial institutions when it comes to fraudulent transactions. With that, I want to echo what has been shared in the morning, that no one party can combat scams alone. We have a role to play, and together, I believe that we can build a stronger defense to protect Singapore against such attacks. Thank you.